Cheers to a bearish open drive on this Thursday 0DT team. This is your routine briefing. We're going to jump right into it. It's a pretty easy look today. It's just a matter of what Mr. Market does uh, in terms of cooperation or non-cooperation. So, mute myself on over here. Okay. In any case, so really I just have 2 points today. So the first point is we have that bearish open drive. So until we get back through RTH open, very, very high probability that we continue either, the sideways chop around the key 3900 area in SPX, or we, slightly revert but don't necessarily pop back through that RTH open. So until that happens, for it's best to have that bearish assumption just because of the probabilities around those bearish open drives. Yet if we do pop back through it, that's when we might want to look for some type of stronger squeeze. We're going to pop into that 39.75 40.30 breakdown box that is on the new contract. So the RTH open is right at about the bottom of that. So if we do get back through it, perhaps we might try a nice squeeze toward that 4,000 area again. Again, it's super unlikely that we see that today. These open drives are usually pretty darn reliable outside of certain catalysts or other news events. So I'm looking to stay short and really just looking at levels. So if you go to the warm-up document here, you can find the link in the description of this video. I'm just watching around these levels, very specifically that 3960 is really the key level for me. Right now we're a little below that, but if we do have another pop here, I'm going to really be watching that level closely for either an add or perhaps some type of bullish position if we start to accept. So that's really the only bolded level today. 3930 is on there just because it's near, obviously where we bounced earlier, but there's also a box from an open drive a few days back. I don't know the exact date, but a few days back at that 30 level, and then just all the way down. I guess 3870. I'm going to go ahead and bold that because that is also an important level. I will be surprised to see that, just given how much we've already moved. We're already well outside the expected move, as you can see. And so really, if it turns into an outlier day, that's the only way that I see that trading. And I mean, obviously, as reflected, you can see our outlier level is 3890 today on the SPX. So yeah, those are just the levels I'm watching. Again, if you want to see this pretty document and has a little more information, you can just go to that link in the description of this video. So let's look at our chessboard. I'm going to have to adjust this. This was our former demand zone, and obviously it is no longer acting as demand. So you can see we cleaned up. I'm just going to go ahead and get rid of this box altogether. We cleaned up all these poor lows with this overnight move. We went below that prior week low, so now we're just trying to decide, or price is trying to decide whether it's going to put in that false break on the weekly, the fake break on the weekly, where it pops below the low and then recovers, or if it's going to continue. So really there's just a lot going on in here. That 39.75 area is right around that prior week POC. That 39.60 is right around that prior week value area low. So as it stands, we're looking to keep moving down, I think, until we start to see some real initiation. And if you're just looking at basic price action as we speak, the bulls had that chance to really get a strong push with that double bottom look, and they're just kind of stalling out. Sideways for now. There's plenty of support below, where as of now we've made a higher low and a slightly higher high. Yet again, it's that bearish open drive. It's really, I find the highest probability a way to play that is just stay bearish until you go back to RTH open. So that's my personal style, but that's what we're looking at here. There's still plenty of room to the downside, I think, and that's where that prior month value area low is at that 70 area if this does turn into an outlier day. So the prior month POC is way above now, and remember that the way that the volume profile, the way that the auction works, theoretically, obviously nothing's ever perfect, is when you lose the POC, you go toward if you lose it on the upside, you go toward the value area high, and in this case we've lost it moving down, and so now the next magnet, I believe, on the macro scale is going to be that prior month value area low at that 70 area. It's a little bit above 70, so I just have 70 on there because I have a different pivot. So yeah, around there. So do we get there today? Frankly, even though I am extremely bearishly, that's a proper adverb, positioned, I'll be surprised to see that type of outlier move today. We've already moved about 85 points as I speak right now, and that low is close to that 100 point, triple digit days. You don't see too many of those. And if we want to look at volatility just to assess further the strength of this move, you can see we're diverging on the volatility chart. I'm actually going to add that to our little comment, but we're still diverging, and that's, I guess you could call that bullish. Obviously, price action isn't confirming, but we're not seeing that huge amount of fear pour into the market. It's quad witching, so there's still a lot of volatility and other fun that could happen here. So I'll be watching that volatility closely. Right now, this is a weekly pivot low, so obviously we're on the day pretty bullish in terms of the VX. However, weekly we're still below that balance. So until volatility really gets going, I just don't see a huge move, and I think that we're going to start to peter out here. Once we touch that eye below, remember the stats around that. There's a 91 or 90% chance. You think I would have this memorized by now, but more greater than 90% chance. I think it might even be 95 that we do touch that eye below. So going to be watching super closely what occurs when we get down there. So just to show the chessboard one more time, you can see we're just going to kind of go after this eye below. As I speak right now, we're kind of going after it. So let me get some close orders in here just in case. No hero stuff. Somebody watching this out of the corner of my eye as we finish this video. Again, you can see where that magnet is. Not necessarily today, because again, you're just not having that fear pour in. So until volatility really gets a bit, I don't think you're going to see another. How many points would that be? 70 points. I don't think you're going to see us nearly double what we're down in the day. Yeah, you never know. So those are the levels. Again, if you look at that warm-up document, you can see. Let me just go back to that real quick. You can see I think the most important levels of the day. The two bolded are obviously that 3860, 3870, and it's really the way to look at those levels as I'm a fan of this guy named Adam Mancini, and this is kind of where I've gotten the levels philosophy from, is you just want to see does price accept or run away from the level. So my whole thing, is speed and aggression. So using that with Mancini's philosophy of just going level to level, you want to see what happens when we get to any given level. So right now we're kind of in the middle of nowhere. But when we get back to this 30 level, we're going to look to see after we touch that eye below, do we run away from it or do we start to consolidate and accept, which makes it likely that we're going to go a little bit lower. So that is all I have for you today for today's briefing. Please feel free to engage with me in the comment section of this video via the newsletter or any of the other links, Twitter, I think being the only other engagement link that we have there. So yeah, that's all I have for you. I hope that you have a good trading day, and I will see you back here tomorrow for quad witching and to end what has been a fun week. So cheers until then, and stay classy.